A friend asked me the other day about taxes and food delivery because I worked side hustles. I worked multiple platforms for a couple of years. And he was curious how all that worked. And that got me thinking that a lot of people are confused about that. And there's good reason to be, because there's no one really explains it. When you join the platforms, they just tell you you're going to be responsible for your taxes. They don't tell you anything about it. And while this video is not going to be about tax advice or how to fill out tax forms, what we're going to talk about is how the system works and what's different about it. So when you work a normal W-2 job, let's call it, and that's a normal employer-employee relationship type job, your employer gives you a check, and on that check they deduct the taxes. When you get the check from them, or you have it direct deposited, you get what's called the net amount. And you can do whatever you want pretty much with that money. But when you're working a 1099 job, and that would be doing deliveries, that could be selling online, that could be, most gig work, it could be content creating. When you get to the point in content creating that you're actually monetized, and there's a system and rules for that as well. But when you reach that point, you start getting income, what happens is the rules change. How the system sees you changes. So we're going to go in a little bit on that discussion. And I hope that you find this conversation enlightening. And I know that I'm a little bit slow talking, but I hope I'm clear enough and explanatory enough that you will understand the point I'm trying to make. Because it's really a convoluted system. And what we often mistake is when we get a check, and you can look at a pay stub from any, let's call it a W-2 job, an employer-employee job, you can see on that check that there's a gross amount, your earned income, wages, tips, and etc. And then you'll have deductions, your federal taxes, your Social Security, and your Medicare. And there may be other deductions as well, but we're just going to stay in that realm for the moment. Then after those deductions, you get what's called the net amount. So you have a gross, that's the starting. That's what you actually earn. That's your hourly wage in total. And then you have your net. That's the amount you get to spend after the deductions are taken out. In a 1099 job, where you are an independent contractor, you're doing gig work, you're doing selling online, you're doing affiliate work, whatever you're doing to make income. And this does not include hobbies. That's a different category. We're not going to discuss hobby income. What we're going to talk about is only related to when you're actually trying to make money, and it's either part-time or full-time. It doesn't make any difference. Then the system starts to see you differently. You see, income is income. And the system doesn't see or treat you in a certain way because you made money. It's how you made the money. And so it doesn't matter where the money came from, as much as if you earned it, it's all considered income. So when you get that deposit from a 1099, and it goes, usually on those are going to be a direct deposit, you're going to get an amount that's going to hit the bank. And for most people, consciously, they're kind of thinking that's spendable income because that's what they're used to from their W-2 job. However, that's not entirely true. And the reason being, when you get that 1099 income into your bank account, that's the gross amount. So there was no deductions taken out. And that's where the system doesn't really let you know that now you're responsible for those deductions. And a lot of people just simply aren't aware of this. There were a change in the rules when you started working a 1099 job. When you got a 1099 income, meaning you're responsible for the taxes yourself, but the taxes aren't deducted when you get that money in. So it's easy to misunderstand that. And especially when, and speaking from experience, especially when you get that weekly check, or say it's every 2 weeks or whatever it is, when you get that deposit into your account and you're thinking, I've got to buy gas, I've got to pay bills, I need to get groceries, and so you start spending that income. Maybe your car is going to need some repair work. But there's other priorities in the beginning, especially if you've been, a lot of people are in this situation. They already were short on income. Maybe they lost a job, or maybe they had an unexpected expense and their regular job won't cover it. So now they're doing a side hustle to help cover that expense. Or you've lost a job and you're trying to get income flowing again until you find another one. Or maybe you just want to make a permanent transition into 1099 work. Maybe you want to be an independent contractor full-time and not just part-time. Regardless, the system, the tax system, is going to see your money as income. It doesn't matter if it's part-time, it doesn't matter if it's full-time. So you pay these bills, and you've been doing this throughout the year. And there's probably two things you didn't factor in during the year. One is you need to hold money back because you're going to have to pay taxes on that income. And the other factor is you should track your expenses because you'll need them as well. Now let's talk a little bit about expenses. Expenses help to reduce the tax liability on income. It won't usually cover the entire amount, and you'll still have to pay tax on some of that income. So let's be clear that expenses reduce the taxable income. They don't necessarily, and don't usually, speaking from experience, cover the entire amount. So you will need to plan that income from the beginning. Now, if you've already been working and you've kind of found that out, we can still offer some additional help in this video. But if you're just planning and just starting to get into gig work for this year, then you'll want to start planning early on. Now, one point to be clear on is that the type of income determines the system rules. For example, W-2 income has one set of rules, 1099 income has another set of rules, corporations have another set of rules, and so on and so forth. So within the system, there are a lot of rules. But what we're focusing on today are the rules that apply to 1099 work. So within this system, it's not about the amount of income that you're earning. It's about the system seeing a different relationship. It's no longer a relationship between you and an employer. It's a relationship where now you're taking responsibility for the taxes. And in this system, it already assumes that you're aware of these rules. And that's the harsh fact. That's the difficult part that doesn't come across in a clear and easy to understand way. The confusion or misunderstanding happens when people participate in a system without realizing or understanding how it operates. Most of adult life works on systems. When you go shopping, the grocery store is actually functioning on a very large system. The credit card that you use to buy the groceries is on its own system. The automobile that you may have financed to go to the grocery store, the financing is part of the automobile system and the financing system. The cell phone you're using to call your spouse and verify you've picked up everything or that you picked the right items, the gig work you might do, social media, delivery services, they all operate on systems. And taxes do too. But this is a certain system that will impact you directly and harshly if you're not prepared for it. So the objective of this is to bring awareness and to help you understand that you need to prepare. This channel is not about professional advice, hacks, or shortcuts. If you ever need detailed advice about your taxes, I strongly recommend that you contact a tax professional, a finance professional, or a legal professional, depending on your situation. The purpose of this channel is to actually explain how some of these systems work. If understanding systems like this is helpful to you, then we've achieved our goal in this video.